Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. The stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis and intraday developing time frame. Just a moment, please. Let me check on some things. Could I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab? Thanks, everybody, for visiting the Traders Lab today. Your host, Tom B. If you're having an issue posting in Discord, it might be because you probably received an email last week about needing to register. It's for spam reduction. I'm not sure if that's the issue. Maybe I'll hear about that. Yes, you need to verify your account, and you should be able to do that. Maybe let me just see. Dan, can you post a link in the Bookmap Discord chat? I'm assuming that those who are in there can access that if they're not subscribed, I should say verified. And thanks for your patience with that. It is really to protect the community. Hold on, guys. Let me try to get things organized again over here. Okay, in YouTube, if you're in the Discord, Bookmap Discord Trader Lab or the Discord server and you're trying to post, in YouTube, there is a link posted so you can take care of that. Very simple. All you're doing is posting the email that you have associated with your Bookmap account. So, hope that solves things. Dan, is that correct? And Stephen? General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. And if you're having an issue accessing, posting comments in the Bookmap Discord Trader Lab or any other chat room in the Bookmap Discord server, be sure that you register and verify your Discord account. And this would be what you have already registered to same email you use to access Discord. Anyway, sorry for the inconvenience, guys. It is really a security thing that we're doing to protect our members and to also keep the riffraff out. Anyway, please post your questions, and if for some reason you can't access Discord, come on over to YouTube. The link is posted in the Bookmap Discord Trader Lab. Or just go to bookmap.com and you will see in YouTube, and you will see you'll be able to access there. Hopefully we'll get this all clarified real soon. Thanks again, guys. Okay, let me give you a couple of quick statistics. We opened higher inside a range, a nice gap higher. And the thing about it is the market was heavily short, as you know, going into end of last week. And with the gap higher, we were anticipating possibility of a short squeeze, and then it's what happens from there. Statistically, we have an 82% probability based on the open, and this is just, remember, statistics are just maybe. Ultimately, the market is determined by the valuation that's determined by the interaction of the participants. So the overnight volume point of control, that's the highest volume price from the ETH, has an 82% probability of getting tagged. It's down here, so you know, right over underneath the current low. The overnight mid has a 72% probability. The ETH high, a 69% probability there. And yesterday's high, all this is kind of always interesting to me because everything is, you know, random in this business. About a 55% probability of getting to Friday's high, and a 67-68% probability of taking out the first hour's high, which is right under the current high of the day. So we have statistics going up, going down, and who knows. So and there's the overnight volume point. Sorry. So that's a target coming down over 82% probability. Past performance not indicative of future results. And of course, everything you must vet for yourself. And then settlement. Now, settlement, and remember, these are just statistics. They're not predictions. Nobody predicts anything. Now, of course, if you can do that, stop on by the Trader Lab. About a 69% probability of getting here. So highest probability in the area probably is going to be this 82%. So currently we are in a short configuration or balance configuration. So it's long starting out, and you know, up, down, and around. Kind of follow the yellow brick road and wonder what's going on. Because a lot of times what happens is sometimes the market is somewhat straightforward. In other words, you kind of get a sense. And the other times you get the sense, but it doesn't necessarily, you know, kind of goes and then it comes back the other way. And the whole thing in trading is trying to get in alignment. And that's what the Trader Lab is about, to help you guys understand market mechanics, how the market works, why it does what it does, and how at times you can get in alignment with it. And the thing about that little word at times means randomness. The market is random. And we are operating in an uncertain environment. So instead of trying to predict anything, what I have found is we can't predict. So if we take prediction out of the equation, then it's alignment and always operating in uncertainty. It really changes how you approach the business. So instead of thinking, and thinking means instead of that need to be right, which of course we all want to be right, it is not what our need is. Our need is to avoid risk and all the attachment we have to the outcome. Gee, I'm smart. Gee, I know more than others do. That doesn't exist in this business. What exists in this business is random outcomes. And if you only trade when you recognize a vetted edge, in other words, a trade that you know will work over a large sample size more often than it fails, that's what creates the edge. And then you put the trade on and it's almost like, well, okay, let's see what happens. And that is really the nature of this business. We don't know what will happen, but we could probably figure out what might happen. This is the RTH Open. Let me show you. And if you have questions, please post them. And remember, if you to verify your account, this is important. So you have access to the Trader Lab and to the Bookmap Discord server with all the additional no-cost education. Let's go from there. So RTH Open, we open here, having a great time. Gap higher. What do we anticipate? Well, I anticipate a couple of things. One is the market is short. Therefore, the first trade I want to do is possibly I'll get new sellers who then may add to the buy stops above if we come out above and then squeeze. And then I have to look at what my targets are. Well, overnight high, which we did not get here, so that has a high probability. We have yesterday's high. So for me, I'm thinking I want to be long starting out, and then from there it's put your helmet on. And I have other targets up here. Let me see if they're all in here. Let me see if I got them in here. Hold on a second. Not all of them. I got to go a little bit higher here. Let me just open this up. I want to make sure I have all these levels on this. Well, we'll get into that. So let me show you the first trade. And this is a long. And this is now to be able to do this kind of behavior or these kinds of trades. It is all about understanding market mechanics. I don't use indicators. I'm not saying you can't. But if your indicator tells you it's a short, why would somebody else get long? Well, of course, anybody can do anything. But let's look at why this might be a long. Remember, statistics suggest high probability of getting up here, and we have yesterday's high. So I know if I come outside, the further outside I come, the better it might be for me, maybe. And of course, the term is maybe. So right here is the highest volume at the time. The high volume is like a retail price. So when you have chop, 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 and it starts at 0, I see a buyer here, and I see absorption. This is a seller. Now, right here, the market could keep going up and just absorb the seller. The buyers could overwhelm this guy, the seller, or we break low. When we break low, unless I come back above here, now what it says is the sellers have taken control. And here's my sellers. I'm going, okay, this is wonderful. Now what? Now, the beauty of all of this is who knows? But I say the beauty, the randomness. So I'm watching it go down, and I'm, what goes through my head? Maybe you should have got short. But what do I know? The market is short. And if these sellers coming in, this is just whatever, somebody who got long on Friday, or somebody who thinks, oh, let's sell this gap, this is going to 0, whatever it is, that I don't know. So I'm looking to read it and see what the behavior might be. So I'm watching here and I'm going, I don't know. Now, this is very important. This is based on auction market theory and the volume profile. Now, what is volume profile? All it shows us is volume and price. Nothing more than that. Very simple. But it's a language of the market. That's where the interpretation comes from, not from a line that might cross something, which is what most retail traders are using for interpreting the market. And what I found, and it's just why this is used by many professional traders, this tool, is that it's not a lagging indicator. It is the what's happening now indicator, if you will. And it doesn't tell you buy or sell. It tells you where the participants, the valuation is. For example, in a consolidation, this chop is actually a consolidation. And if I break away from it, as an example, and this is now too high, this volume in this microstructure, I can go lower. That's what I know. Now, in a fractal, this yellow line coming down represents in the developing daily time frame, that's this, where the highest volume is. Think of it like your store, where the high volume is where buyer and sellers agree to do business. Now, here's the thing about a auction that's in real time. We're not in the supermarket where the prices get fixed, maybe they'll change in a week. We're in real time where it could change in a heartbeat. So we're in a different time frame or fractal, but we operate the same way. So I'm looking here, I get VPOC migration. Now in the Trader Lab, we have structured trades, as you know, and this is available to all of you at no cost. There's a link in the bottom of YouTube if you're interested in what the Trader Lab is all about. And the Trader Lab is a community of like-minded traders that have come together to leverage their collective experience. So right here, I get, this is the volume point of control. I'm going to label it right here. And I made up names for this. When I first started doing this, I wasn't aware of anybody who was doing it. I started trading in 1980. I learned about market profile, I think, in 1985. I can't remember anymore, but, you know, a while ago. And I started trying to figure this out. And I also, before that, was using indicators and systems and derivative indicators, and I thought I was hot stuff. What I was, though, was always going back and trying to fix something that would decay, and that's called optimization. And when we used another term, it's called curve fitting. But back then, nobody really talked about curve fitting. They were talking about systems and, system mechanics, which is take a chunk of data, go back, optimize it, and then do walk forward testing. And if it's working good, off you go. And so I was doing that every 2 weeks. Anyway, and it would always be breaking down. So here is the retail price. So I'm looking at this, and in the Trader Lab, we have a structured trade. This might be a little advanced for some of you, but let's look at it. If this is the retail price, logic, let's use logic. And our S&P is going for $1 here. I'm making a number up. We can't buy it for $1. And I see my buyers. Notice the change in behavior. Now I got buyers here. I got my microstructure here. Let's watch it. My sellers are here. I come back and check this micro volume. I'll get into this a little later as far as microstructure. I have my sellers. I come down, I take these guys out. Okay. Chop, 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 chop. Looks like it's going to do what? Continue down. What does it do? It changes. Now it changed here, right? So right here, it changes. And I see a stop sweep here also. So boom. So I pull back. But what happens here? This shifts up. This is called VPOC migration. It's terms I've made up. I made this stuff up because there was no terminology for it when I started. Right here, I see it come back and check. Now, this is an aggressive trade, and it is a Trader Lab structured trade. This is support. This is support. I took a long here. I put my stop under here, and this is very equivalent to when you start praying. So I do some of that. This is the variable high volume node. This is my structure to scale. This is what's going on. This was too high. Now this might be underlined too low. There it is. Break high, pull back here. This is the test. VPOC migration, icing on the proverbial cake. Buyer here, pull back here. This is the area for long. Is everybody following? And remember, guys, if you're having any challenge in Discord, go to YouTube, and there is a verification there. You'll see it's right at the top of the stream. You can verify your Discord. Basically, it's just to keep the spammers and whatever else you want to call them, and there's other names for them, out. So it's to protect you and to protect the environment for all of the Bookmap Discord participants, and especially Trader Lab, of course. So this was too high. How does the market work? Well, if this turns out it might be too low, then the possibility is these sellers, let's come back to what happened. This is why you got to stay in alignment. Here was where the sellers were, and they took control. What's above this opening swing? The opening swing high, right? Actually, 830 is right here. And I have a high probability statistic, the ETH high. So I know I can come back here. That's my scale. And then if I get above here, I'm going for the ETH high. And I have something else up here too, I think. And yesterday's high. So these are my targets for the long. So I figured that's not so bad. Good risk reward. Everything is random. There's my scale. Now I have another possibility here, and this is more advanced. We're going to watch this level on a pullback, and we know here we had volume, and the sellers came in here and they got obliterated temporarily, maybe. So this is too low in the microstructure, this is too low, and this might be too low. Let's watch it. So a bit advanced, but this is a Trader Lab structured trade. This is a long. Now this is an advanced Trader Lab process. This is a long or an add. This is advanced, guys. No recommendation for nada. Just letting you see the yellow brick road. Now what? Now this isn't here at the time. Where's the stops? Does anybody not think there's stops at yesterday's high? Next target. You have resting liquidity in the book here. I am going for this. Why? The market goes up to go down. The market goes down to go up. You know what I mean? Maybe. So, high probability. Yesterday's high, knowing Friday, everybody on the planet's short from the last couple of days. Here. Okay? So that was the target, and that was it for me on the long. Now, so that was enjoyable. So now I'm looking at this, and I trail too. So I want you to know I don't get everything. I don't, because I can't predict anything. I don't know anything. So for me, yesterday's high. Then I'm thinking we're going to go higher. Okay. So I'm over here. I've got my support here, right here. I have volume here, and I see my sellers were up here, and I'm over yesterday's high. So I'm going, I'm looking for buyers above here. So right here, so I'm looking for buyers. So I come back to yesterday's high. This right here is support. So I come up here and I'm looking for us for continuation. And I'm just, at this stage, it's very murky for me. I see this. There's a seller. I go, oh gosh, now what? Let me show you. And that is, I don't say, oh gosh, I have other terms for that, but I think that's appropriate. So this here, this is my volume. There's my seller. I saw the buyers. I see the sellers interacting with the buyers. They are winning. I come back up. This is the absorption detector in Bookmap. It's really cool. I like it naturally. Why? It's helping me see what's going on under the hood. The other part of it is, as we're coming up, I'm seeing the buy stops, right? And I'm seeing selling icebergs with the absorption. So I'm seeing a combination of elements here. I pull back. Where am I pulling back? I'm pulling back to this micro high volume where the absorption was, which is right there. So for this thing to continue, it needs to clear this right there. Micro high volume, which is right there. And no clue, by the way, because when this is all happening in real time, it's almost like, all right, this is, yeah, great. What about this? Uh-oh, selling icebergs. So here's the way I think about this. If the market is short, which it was, Thursday, Friday, and I come up here, what is here? Buy stops, okay? The shorts that are over yesterday's high. Buy stops, buyers. What's on the other side of the buyers? Here's the buy stops coming out, buy stops coming out, okay? Here, all this is the buy stops. Icebergs take the other side. Now, we can anticipate behavior like this. We can't predict it. There's a big difference between anticipation and prediction. And I hope you guys will take a moment and think about what the difference is. So when we come up to a level, we anticipate stops, and we might anticipate some icebergs. What we want to see for continuation higher is more new buying above here. So but what I'm seeing is the buying buy stops, and I'm seeing absorption, which is the icebergs. And where's my buyers above this? See, this is one of the ways you need to think. And if you're in Trader Lab is very much about a narration of what anticipation. And then what do you get? I anticipate buy stops above yesterday's high, and I anticipate potential buying above because I have targets above. And I don't get it. I get the buying. I don't see the continuation. So right here, it's like, come on. Ever cheer? Come on. But I'm seeing selling, selling. I'm showing you just a kind of a sense of how the market, what you might glean if you have an order flow tool, and then you actually know how to use it. Now look at the change. Bang. Okay. So at this point, if you're hanging in here, you'd be out. Okay. Stopped. Trailing stop. No problem with that. But now what? VPOC migration. So right here, I'm looking at this. So this goes higher. The saying that this might be too low. Let's watch now. And I know now this is too high. So I've got two possibilities. From here back to here, that's one, or from here up to here and a short back to here. Let's see what it does. So right here, I'm looking for this to this, but I am conscious there is no buying up here. And then I see this. So you guys know I got long here and I was targeting this. And then either a short or whatever. So I got long, I did not get my scale, I took a stop here. Okay. Now I go, oh, that's nice. And I break here. I pull back here. This is the same trade from the other side because this is the long looking for this. When this fails, then, and we're inside of yesterday's range, which who knows, I was thinking we might come up into there here and then whatever happens happens. So it didn't happen. When I break below here, of course, stopped, teeth chatter, but what else happened? I do the opposite. So let's look at the long. Test, long, fail, part of life in the fast lane, break, test, same trade, opposite side, short. Now we're looking to take the longs out. And where to? Where's the fuel? VWAP and mid. So I took it to here. So let's continue. Questions, by the way, let me come up and I'm going to tell you today has been kind of a difficult trade because both sides are active. And it sets up something called a neutral day, which I'll be talking about in a little bit. Are you guys doing okay? You don't think my VWAP is showing? Hold on. I think. Guys, at this time, at 9 and change, was the VWAP, RTH VWAP at 55.86? Can somebody in Trader Lab confirm that? I believe this is correct. So market comes down here, assuming this is the correct place, and I cannot go look back at where my trading platform. I don't want to lose the time. Break here, pull back here. This is still too high. Then we're looking at coming out here. Actually, I take it all back. There's one other thing I didn't mention. I scaled, and then I had this as my target. So one more contract. I forgot all about it. And we don't get here. And the overnight mid has a high probability also based on statistics. You have to vet them for yourself. That didn't happen. So I was looking at this and this, and I had my order resting here. So that didn't happen. So I got taken out. Is below VWAP, sorry, Trader Lab, I didn't get a response from any of you on the VWAP location at this time. Is the audio not working over there? At this time, at 9 a.m. Central Time? At that time, this is where the VWAP was. Is that right? Around 86. That's what I was asking. Thanks. Now you're saying 95. Guys, I'm really confused. I need somebody to step up here and make this clear. Please answer the question. Is this accurate? At 9 a.m. Central Time, this is where the VWAP was, around 86. One more confirmation. Okay, great. 95. Okay, great. Then it was 95. So this is not accurate. I don't know what's going on with it. I'm going to turn it off. This has to do with when I start my Bookmap, and I'm just going to do one other thing here. We'll get that squared away. Sorry about that. Thanks for the response, guys. Okay, thank you. Okay, so I was coming down on the short looking for this was my target, and it missed. My runner got taken out. So there. Now, and this is the actual VWAP now. Okay, and the mid. So we get VPOC migration. So right here, this shifts down. Now the way this works again, let's come back and think about this. This is too low. We shift up, it becomes too high. We come down, we don't get here. So it's two-sided trade. We shift down. There's two possibilities now. Same as before. If we break down, we continue down to here is the target. If we cross above, then we can come back and squeeze the other way. This setup is a long, right here, scale here. You're going to see something similar. And then I'm looking for the IB. And this was also very interesting. It's a day where I will tell you that I just sort of was throwing my hands up. But let's look at it. So this shifts up, looking good. This shifts up, looking good. I'm back over yesterday's high, and I know there's buy stops above the first hour's high, which is this. It's called the IB, and we have about a 69% probability of taking it out. So this is down below is a long, this is a long, this is a scale. I took this one, and then I'm looking for again for it to continue higher somewhere. There's other levels, they're not on this chart, but this is what's important. Now here's something that was very interesting. So I'm holding a long. I have my scale, so this is a long, this is all trader lab. So I got my scale, and I'm going for wherever. Now, I happen to know that I don't know what's going to happen. I think we can agree maybe nobody really knows. So right here, I see the buyers. And remember, if the market's short, which it was, so we went long, then we got short. Now they squeezed the shorts, and it's coming back the other way. And if we come out the top, we can anticipate a continued squeeze. But here's what happens, and I want you to know about it. And this was really interesting because I'm holding a runner, and we come up statistically about a 69% probability we take this out. So I'm saying, okay, I got my stops. So I'm looking right here. I come in, and what I'm noticing, and this is registering in my brain, and I think about these things, I listen to my brain, not my fear, not my greed, FOMO and all that. All those things are playing. It's like a loop in my brain. Oh, you don't want to get out too early, or this thing's going to go up and you're going to, it's going to go up another 20 points, whatever it is. Don't trail too close. Don't do this. Don't do that. And all that's being triggered by fear of loss, FOMO, and the rest. You're not hearing that. You're very fortunate. I hear all of it, and I ignore it as best I can, still being human. And sometimes if I have a lapse in consciousness, in other words, I'm unconscious, I might be susceptible to those errors. So I try really hard. I hear those voices, but I know from my experience, those have never served me. For the random times that voice has actually helped me, it's cost me hundreds of thousands of dollars over almost 45 years of trading. So, you kind of get to a point where you go, yeah, I recognize this, and we'll see you later. Thanks for that. So, but here's what I saw. We come up here, and there's part of me, the part of me that says, yeah, just manage the trade. Never mind what you feel. But here's what I saw. We come up here, and I see the selling icebergs, and then we're here. Here's the buy stops. Now, what I'm looking for buying above here. I don't see any buying. Right here, here's 165 buy stops. That's the shorts being squeezed out. Then right here, I got 2. Where's my buyers above here, And now I'm through here. This is the IB. There's 2 possible trades in the Trader Lab here. One's called the IB continuation trade, a long, and the other one is a short, which is called the IB failure. Now, right here, I'm looking at it, I'm going, and I thrash right at these moments because I'm saying, well, what is the evidence? I got the shorts out. So think about how this went. We had sellers early. We squeezed the sellers. That was the long. Then we took out the longs. Now we got the shorts. It's like going back and forth, back and forth. And I'm running with my statistics. Yesterday's high is a high stat, and this is a 69%. So everything is on cruise control, theoretically, except right here, there's trouble. So I'm like, what's going to happen here? I see my sellers. I have micro high volume. I'm going to show it to you. And I didn't trade this well, I want you to know. I was conflicted. And if I get conflicted, I tend to thrash. So I just kind of let it sort itself out. So right here, I'm going, this looks exhaustive. But it is not actionable for me. It is antenna up. What does it mean? So there's my sellers. This is where it exhausted. Let's just try to see the behavior. We don't come back here. I come up here. What do I have here? Nothing. What is sitting? I'm going to draw one more line for you guys because this is what I'm seeing optically. In other words, I'm looking at this, trying to interpret it. So there's volume here. There's a seller. There's my stops coming out. There's that, and then I have no buying above it. I see my sellers here. Antenna is up, teeth chattering. Right here is my volume. You can see it there. Also in the microstructure, I have volume there. This is an auction. So this says too high. There's my seller. This is suggesting this is too high. It's not actionable. I break down. I see more aggressive selling. So I know this is too high. And now what happens here? If these guys were absorbed up here, which is why there's buyers sitting there, and I have my aggressors taking over here, this is delta, and I come back to these sellers here, and where's my buyer? Nothing, nada. Now, there are buyers and sellers everywhere. I filter this, so I just see I only want to see what's material. I don't care about all the minutia. I want the broad stroke. I can figure out what's going on. If I see volume here, which is buy stops, by the way, and you can't tell the difference between a market order aggressor or a buy stop that becomes a market order. So all you know is there was a lot of buying here. But if I don't get buying above it, then there's a problem. There's the sellers. If I don't get buying above this seller and this guy's sitting out here waving at you, there's a problem. Watch. And there's the sellers. So I get taken out, my trailing stop, you go, yeah, okay. And then I'll tell you how smart I am. I go, yeah, I guess I was right about what I read. The thing about it's a suspect of exhaustion. I don't know until I have behavior after something happens. I'm just telling you. So I go, that looks like, and then there's the seller, and then here's the retracement. And now there's no buying. Now I know. But look at this. I can't react that fast. So I'm telling you right here, and I'm going, this is a short. And where can I get on this, right? So this was a bit of a problem. Let me show you where I got short here. It's not my favorite, it's not what I like to do, but have you noticed? I come back here, I check. This was my short against the VPOC, and now I'm going to take out the low. Why? There's stops under here. That's my last trade, by the way. So we're abusing everybody, really. And my target is this. This. Oh, there you go. Finally, right? So this is trading in fractals, and this is what we do in the Trader Lab. Now, the way I kind of look at it, and this is not, it isn't about what I do. I've just kind of found that the way to get paid for me, and this is not a recommendation, is to catch the larger moves. I am not interested in sell this, buy this, sell, buy this, get long here, test here, go up. Nah, not for me. This is for me. And this, which couldn't happen. Back to here, back to here. This is not a long for me. It could be a long from here to here. You notice what happened here? Sellers, sellers, sellers. Sellers are here. They got absorbed. This would actually set up a long from here to there, which is not interested in. This sets up the short from here, back to here, back to here. You could trade this any way you want. I mean, there's no right way. I have found trading less for me, and I'm only talking about me, yields more because I take stops. I, waltz into something and my stop gets plucked, and I just go, okay, because my risk is typically around 3 points or less per contract. So I could afford to take stops and I look at it like, am I following my plan? And if I get out of alignment, it is what it is. I can't predict anything. I just try to stay in alignment. But once this thing set up and I couldn't get in it, I mean, I'm not someone who's going to get in over here and put a stop here because that's where it has to go. But this is a trade for me. So, and that's a good trade, right? So if you can get something like this, now you're working like 20 points, that pays. And then it's trade management. Whatever happens, happens. Is everybody tracking? Questions, by the way? And guys, Trader Lab, thanks for letting me know about the VWAP. I don't know what's going on in VWAP world. I have to check out the settings. Okay. VWAP 91. Let me just check some. Yeah, it looks correct. VWAP's in there. Okay, guys. Let's get back to real time. I'm just a little, when something isn't working right, I get distressed. So we have, and this, well, there's two trades here. In a neutral day, what this is called, it is outside in mean reversion trading. Now, the possibility is we're going to continue with the downtrend, right? But currently what we're seeing is both sides are active. And it's the fight at, it's a shootout at the OK Corral. So for me, mid and VWAP are targets. They're not actionable locations. That's up to you, of course, But and now the volume point of control is down here. Notice what's going on with the volume, how it's bouncing around all over the place. That is suggesting that this thing doesn't know what it's worth. And that's okay. It doesn't make it a pleasant experience necessarily because you see, here's what we have. Both sides are active. And what that can generate is, and what it's tending to do is it's auctioning back and forth. We know this was too high. We know this is currently retail. We know out here is now a low volume area. If the rally, quote, is over, they failed at the top, there was no meat on the bone, no buying, it exhausted, then do we want to be back on the short side? There's the question. So let's think about this a moment. If this is the new retail price, how might we trade it? Let's think about this. In my thought, and this is still open over here, missed it by a hair, this still has an 82% probability. If I think in statistics, and if the market is short, if this thing is going into something called mean reversion, it is now going to be outside in rotational trading. It is called context. And the problem with everything in trading is trying to identify location. So I'm going to make a few little notes here. We have VWAP and mid. There's going to be stops here. We can anticipate selling here, and we can anticipate selling out here. This is called the low volume node. I'm going to mark it. And what this is about, let's just put some pieces together. And these are not actionable, they're areas of interest, because we need to determine, I'm going to explain what this represents, because if you know what it means, well, we don't need to do that. Then it might make some more sense. This is now the current retail price. The way consolidations work is we try to find what's too high, and then we come back to the retail price. This is like shopping. I'm not paying that. You notice how the volume dries up? Well, that means there's less buyers here. And then this is where the retail price is. Everybody's willing to do business. And what you're trying to do in mean reversion, which is part of the joy, is where's too high. And that's the hard part, because you'll get something like this and you'll get a little head fake. It can push higher. You get a little head fake. And that's the problem with mean reversion. So patience is required in mean reversion. So here's what we know here. Buyers were here, sellers absorbed them. This is too high. This is microstructure. And again, if you're going to trade something like this, you absolutely need the range to get risk neutral. This is the quote problem. Let's look here, outside edge. There's a couple of them, right? There. I'm going to mark this. Low volume node. And I want everybody to know, and I always say this, this is my least favorite condition. And what makes it, and it's because it requires a lot of patience and discipline. Where is the outside edge? That's the thing. So the further you can get outside, the better it is. Let's just see what's what here. So let's watch. And this is difficult. So nobody said this was easy. So we know there's stops at VWAP and mid. So the possibility is we're going to come out here and we're going to see a reaction here from retail traders who may or may not be right. The target's going to be this. But this is not necessarily a location to interact. It might be part of the joy. So I have this location to observe. I have stops here. The fact that there's going to be potential sellers, it's the mid and the VWAP, that for me makes me very uncomfortable, because I know there's stops here, and I know there's mechanical sellers, and they remember in the casinos the gamblers get paid. Doesn't mean that this won't be from here to here. This might be a terrific trade. There is enough range. You got 10 points. What we don't know is, are we going to come back here or just to here, to the LVN? Let me get rid of this. So let's watch. Icebergs here, absorbing. So we want to watch. Let's just keep an eye on this. None of these are trade recommendations. This is a hard a hard process, mean reversion, because you could end up taking shorts and really club yourself with this. And that's why it isn't my favorite. But I just have to be very patient with this and also accept that I won't know the outside edge until hindsight. For example, if I see, so I have a rotation here. This might be a short, right? Let's watch it. I take more stops in mean reversion than I do just running around because was the short here? Was the short there? Is the short here? See, they all look the same to me. There's micro high volume and it has alignment. You see, this is to me the better short right here. But stops are here. So if you get involved here against this micro high volume, your stop's going to be right there. So right here, you'd be stalking. These are not trade recommendations. You have to be patient. There's nothing mechanical here. Let's try to see this in the order flow. So there's the micro high volume. There's selling iceberg. There's the sellers. Buyer is here. Right here, if I get a buyer above this, we can squeeze. If I can't get a buyer above this, it sets up a potential short, and these are not trade recommendations. This is very high risk, in my opinion. What it requires to do this is, number one, of course, it's random. You have to be willing to take your stops. You need to look at behavior using the order flow. It's very nuanced. I'm seeing the buyers and I'm seeing the sellers, okay, the absorption. Right here, the buyers seem to be taking the sellers on and they're succeeding. You see, I have an iceberg sitting here. This guy executed. So right here, this is very important what happens here. These are not trade recommendations. I want to stress that. We're on this outside edge and we're filling the volume in. That suggests potentially we're going to push through. So let's see. So I have nothing here now. This is really coming off the table. This is where the buyers were absorbed. This is right the edge right here. So right here is like critical. If you took a short here, your stop is here. I'm not recommending it. I'm just saying as if you did. But this is contested. And what you're seeing is the sellers are here and the buyers are here. They're still here. If these sellers don't take over right here, they're going to get squeezed out. This is order flow. Let's just watch. I don't have a high level of confidence, of course, in the short, but mean reversion is just mean. Remember where the stops are. So let's just watch this. I'm seeing the buyers. I'm not seeing sellers below here. That means no bueno, you see. So now we have to watch here. Only 10 stops came out. Tricky. We're above the LVN. We're filling it in. So that's pushing us back up. Let's watch what happens. That's why these are not trade recommendations. This is very easy to take a bunch of stops trying to find the outside edge. Remember, there. This looks like the outside edge. Very hard to trade. So now let's watch if we come back here, because that would set up this. Not a trade recommendation. Let's try to see it. These are not trade recommendations. We want to see the behavior. They were absorbed. They were absorbed. These sellers got absorbed. We popped some stops out. I have my sellers below. This is resistance. This is resistance. So this area, this volume here is resistance. So, and I specifically encourage everyone not to trade this until you understand it and you have an edge with it. Remember where the stops are. That has not changed. So all that might happen with this is you get a rotation and they squeeze further. That's the part. But this is where the target is if this trade works from here. So right here, we are looking at location. We're looking at where the volume was. The sellers took over here. These guys were absorbed. This is an area to observe. It's not a trade recommendation. This is where it might go or not. So let's see. And this is very hard. So for me, I want to see more squeeze, and I don't necessarily need that. This is only like 5 points. Now it's enough to scale. And if so, if you did get short, where you're trying to go is here. So there, and the overnight volume point of control. Those are the targets on this one. And it's not a recommendation. Any questions? Hard trade, guys. Hard trade. How are we doing in YouTube? Please give a thumb up if you're getting something from this. This is not the most pleasant experience in trading. This is hard trade. And remember, the thing about this is, where's the outside edge? That's the part. Let me go back here. I want to show you something else. You see this here? This is a location up here. High volume, chop, 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 break. Now, this rip creates something called low volume. Low volume is because we didn't stop and do the chop at the chop. The chop chop is an auction. It's like too high, too low. What do you think? Now I'm not paying that. I'll see you later. Leave. That creates the acceleration and low volume area because it didn't stop. When the market pauses, it creates volume. Chop, chop, chop. Well, if this is now where the highest volume is, right now in the developing time frame, and we come up into this low volume area, which is what this was about, theoretically, and that's all you got in this, we could test this, move into it, and if this is still too high, we come up into this area and then potentially come back here. That's the trade. And it could just as well come back up here and get these stops. Remember, that's the two locations we have de jure to be considering. So a short here to here, fall out the bottom, or a rotation here into the squeezeteria back to here. That's what I know. And again, I have no idea. So for me, I just put the trade on and put a helmet on and then promise I'll never do it again if it doesn't work. Just kidding. This is structured trades in TraderLab. The thing about this is you need to know what this was. You need to know the buyers were trapped here and we had this location. This looked like the short right here. There's the absorption. There's the pop. There's nothing. There's the pullback. That's the short right there. Now, nobody gets short there. So maybe you're short here, you're short here, your stop's up here, and this is where you're going. And then your choice in TraderLab or wherever you are is to just, this is kind of up to you in your trade plan. You're going for this, or you're going for risk neutral. So your stop can be at break even, and then you're just going to let it ferment, and you're going to go for that. And then maybe lower. Is everybody with me? That's the trade. Was the IBF from IB low? You could take it. I'm getting a question if this long was not qualified. Well, let's look at when it happened. So we come outside. I'm getting a question about the IBF because we have the IBF as a long counter trend trade. Same one from the top. So we come out here and then we come back inside. This sets up a long. Yeah, you could take the long, but you get VPOC migration. Once you have VPOC migration, then I think once I see this, then I'm in what's called mean reversion. Now everything changes. Instead of coming back all the way up, since this is now lower, I'm now in a outside in rotational trade context. So I'm going to be trying to get short. So you could be long from here But when this shifts, everything changes. So now you'll be thinking, where's the stops above this swing? And then you'll be looking at shorts to come here and fall out the bottom. If we squeeze above here, just remember, you have to get risk neutral. Then where's the stops? They're out here. So it's kind of a mixed bag, because what we're going to do is we're either going to come there and squeeze, and there's also another trade in Trader Lab, VWAP to VPOC. But now we're in what's called mean reversion. So the context is down and it has changed. It is now outside in. So we're in mean reversion in the downtrend. So that means short from here, if it sets up to here, or this to this out the bottom or somewhere. Does that make sense? That's a fair trade there, Costello. The thing about it is you got to be aware, if the volume is down here, then the longs exhausted up on the top, then for me, I'm not thinking longs. I'm really thinking shorts. So I'm only short. I have, other than the morning, I didn't have any longs. I mean, I had a couple longs, as you know about, which I narrated, but now it's just short. So I'm going for this. Does that make sense? Well, they're both. I'm getting a question for Alan. When I'm looking at these low volume areas, what am I using? I'm looking at the chassis. So once this is down here, it's where's the outside edge. So this is the low volume zone. So it was here, right above here. That's where it is. So I marked it on my chart. It was there. Now we come up and we could pop. This is a swing also. We could pop into this. See? So that sets this up. This is the short off the low volume zone. Then I'm trading in a fractal. In other words, I'm trading on the full developing time frame. I'm looking for outside. Remember our conversation, where's the outside? Tom wants to hit himself with a cast iron frying pan, but this is a short, and I narrated this. Now it's very tenuous, but what you got is we had this. You see? What is different? What's different is that. And you got to always look left in that swing. And then this is the low volume area. So it could pop into, it could come up here any, wherever. And it could get to mid and VWAP. But when I see this, this is my trigger. This is my selling trigger right here. So I have the buyers. I get more buyers. Now I was talking about it right here, right? There's a buyer. There's my seller. See the change? Here's my pullback. So this is your short. This is your stop. It's palatable. It's a couple points. This is, you scale ahead of this thing because this is the mean reversion, and then you just manage your trade. You're going for that and you're going for that. And whether or not it gets there, who knows? Does that make sense? So the CVP, which is this, is showing me what's only on the chart. So I use the CVP. And just looking at this right here, let's go back and look at this when this is happening. Here's the high volume in this structure. I have not gotten out into the stops that are above that last swing. I'm now into the stops, 45 stops, and I see a selling iceberg. No clue. Let's watch. I see sellers here. So I'm seeing more selling. I'm seeing stop divergence right here, and I have my icebergs. So right, and there's my seller. So if I look inside of this, there's a little high volume right there. Nothing to do yet. Delta shows me the buyers up here. So I got my buyers. Now they are either buyers or buy stops, and they're a mix of both. But for me, this is retail. So it's outside it. That's why I'm talking about mean reversion. So there's my seller, there's my test. Now I don't know. This could just as well do this and go. I see nothing here. These guys were absorbed. There's the absorption detector. These guys are absorbed, absorbed, absorbed. So right here, it's the short. And, you know, if you're waiting on this thing, you see this, you see nothing here. You see a seller again. We got to get below here. I see a buyer. What happens here? Nada. Seller, nothing here. All these could be shorts. And then you're going back towards this for a scale. I always give it 2 ticks. Let's watch this behavior right here. Now remember, we come out here, we can then come back here. This is just trading, guys. There's nothing more to it. So the idea of this, remember, you either get risk neutral based on price and stop. So the worst that happens is you scratch when you come up here, or you're going out for this thing and you give it 2 ticks. So the thing about this is you would have a trade management process. The worst that happens is you would scratch. If you scale, you scratch. If you're going for this, if you never move your target or manage the trade, you would take a stop. This is a specific to trade plan. Let's watch. We came out, so now we're pushing further outside. Where are the stops? They're going to be up here. Where's our next trade? Potentially VWAP to VPOC. But it's very two-sided today. So it's a harder trade, I find. So let's watch. Let's look a little bit further over here. This is the last high volume structure right here. I'm going to put a line on. So that's an area I'm going to observe. When I say I'm going to observe, that doesn't mean I'm going to trade it. It means there was behavior here that right here, this chop, we rejected it. So the possibility is to come back here and check it out. So let's see what it does. Variable high volume node here, we broke below it. Okay. So now I have this. I have this. Let me look a little further up here. I have this one also. I'm going to mark this. I do this because they scroll off the chart, and I'm really focused on Bookmap because I want to see the behavior. Now, what do we know? There's stops here. Remember, I was saying, well, we got this to this, and if this fails, the next level was up here. So I have this, but I know I have stops. So getting involved here, to me, involves more risk. My next low volume area is out here. So we're going to be looking there also. So let's see what it does. Questions while we're hanging out. And please give a thumb up in YouTube if you're getting some value from this. Remember, this is just trading. There's nothing more to this. No secret sauce. Don't have it. Doesn't exist. Really, what trading is knowing where your trade might show up, knowing what a trigger looks like, managing your risk, taking stops to protect your account. It's not about being right. And trying not to micromanage or respond to your emotional triggers, which is we all have fear and, FOMO and greed, and all the stuff that goes through your head. If you didn't get a scale here and you got taken out, you're going to hear, I shoulda. Well, no, you shouldn't have. You should do what your plan is. Not hindsight is useless in this business. Errors you can correct. You cannot predict what's going to happen on any rotation at all. So all you can do is anticipate behavior. If it doesn't happen, that also gives you insider input. That's all you got. So what do we know? This, which is still a potential target, was too low. We have to see, and we're in a two-sided trade. We exhausted at the high of the day. We know that. So, and we have an 82% probability over here, which we may or may not ever get to. Who knows? So we have this as a target. You can write that down. That's the overnight volume point of control. We know there's stops at mid and VWAP, and we can anticipate sellers here. We also have a structured trade in the Trader Lab. That's VWAP to VPOC. So this area is going to be a potential short, and this is not a trade recommendation to come back here. And it's very tricky. Again, it's outside in trading, and you guys know how I feel. Because it's very easy like to go, well, let's sell this. Well, that was a good short, but we're above it now. We're above the high volume here. That creates a conundrum. I see my sellers absorbing the buyers here. So we're just going to sit. This could be a short from any location. I think, and it's just based on experience and nothing more, the mid and the VWAP have stops so that we have a shot of getting up here and maybe a little higher outside somewhere. It's possible to see retail traders sell this mechanically. And this is very hard. In other words, this is where FOMO comes in. We have a structured traded Trader Lab called VWAP to VPOC. Well, when I look at VWAP to VPOC, I'm also thinking a couple different ways. I'm saying, well, retail traders are going to sell this, and they might be right. I may see a counter rotation off of this, and then maybe we'll squeeze them out, and then the real move starts to come back here, or it's going to come here and go there. I don't know which one, right? So I know that. That's my next trade, and I'm not recommending trades. I'm just saying these are structured trades in Trader Lab. The thing you need to be doing, no matter how you trade, in my opinion, is only knowing where behavior might take place, not where it will take place, because we don't know that. I mean, look, I see selling here and here. I see icebergs over here. I see the selling. Why wouldn't I just sell this, right? Well, it might only give me a little head bobble, or it could go right there right now. That's the randomness. So for me, I don't have a trade here. I have a trade up in here somewhere. And I know this was too high. Let's look at what we know. And there's low volume here. The market has a tendency to come back into these areas. This seemed like a real good short to me because we tested it. Sellers were here and down we went. So that is a structured trade in Trader Lab. The next location, same trade from a different location, potentially is going to be out here or up in here. I don't know. So I don't know that. I just know this is still my target and down below is still my target. Now, if we push through all of this, then it's like throw your hands up and go, I don't have trades for this at the moment. So I have to wait for locations. Questions while we're waiting for this to ferment? That's correct, Cocobolo. I'm still, the fact that overnight VPOC was not taken out kind of creates a bit of a conundrum. But this has a high probability, but we didn't take it out. I'm still going for the downside here, but that doesn't mean that we don't have the low of the day in here. It's very conflicted. It is two-sided trade. So I have my locations. I have this. I have out here. This is an area, and it can do anything. The fact we didn't get here is a little bit disconcerting, but my next trade is going to be potentially out in here. So let's see what it does. Remember, guys, you don't have to be trading all the time. That's FOMO. The thing to do is think about it in the sense of, I always think, well, where's my opportunity? But where's the other side? Look at the selling I'm seeing here. I'm still seeing good selling, and this is a location, right? So this is still problematic for me because I'm seeing the selling coming up. That is good only in the sense if I can get up in here and squeeze. I want these guys out. and we may never get there. And then we may come here. And if that's what happens, then it's not my trade. Oh, VPOC migration. That's a bit of a problem. Let's label this. Let's interpret this. So this is now retail. If this is too high, we're coming here. This is very difficult, I find, because we can just give a little head fake, hold this here, come up here, and squeeze these guys out. Now, the short I was talking about was to come back here. The fact that this has moved up really puts this whole short into question. So I'd be pretty okay with just waiting. In other words, I find that I'm not here for action. Why are we doing trading? Isn't it for profit? So for me, if I don't have a trade that really checks all the boxes, even if it works, I know over time I'm better off just not taking the trade. So if that yellow line was here, I'm looking for the short. So here, this is very suspect now. I'm not, and I have to just say I have to wait and see what's going on. I'm now through this low volume area. My next area is going to be here and out here. So now I'm thinking more about squeeze and come out to this one. I'm taking this one off the chart because we came outside to there, which is where it was, and I'm now above it. My next area is here, low volume node. So we're going to take this off. It doesn't exist anymore. So what does exist? Mid, VWAP, and this. This is too close. Let's look to the left again. I know this is potentially too high here, and I know this one's too high. So this level, but the problem is that, so no trade for me. I'm seeing all kinds of selling here, which suggests the rotation, just like you saw it over here. I'm seeing tons of selling here, absorption. So this might be a short. I can't sell it. I'm just telling you, me, if you have it in your plan, go for it. I can't sell it because this is the retail price. So if this is where the most volume is, best I got is coming here. If I fall under here, then I can come here. Okay? Here's another little tidbit. You see this? This was our short, right? What do? We come back here. What is that setup? Subject to, if you're a scalp bear, along into this. I'm not suggesting it. I'm just telling you this is advanced. I don't take that. What I do is if I see this, and of course this is all good, and then I come above this, and now this, which was my resistance, old concept, resistance becomes support. I get VPOC migration suggesting up. Do I get long? No, I do not. What do I want to do? I want to see what happens here. And I have my low volume outside edge here. If I come out here, I'm thinking short back to here, and then down to here, and then out the bottom. And if it doesn't do that, then that's just one trade. And this is funky. This is a day that I think takes more discipline and skill to stay in alignment. And that's just the reality of the real world of trading. There's no silver bullet or any of that, unfortunately. Does that make sense? Oh, thanks, Costello. I'm actually going to look for that and try to post it. Um, I don't even know. Let me just see if I can find that. Yeah, I don't know where that one is. If somebody's in the Bookmap Discord Trader Lab, can you grab the link and put it in YouTube? The one that's trading in trend, it's about 5 hours, almost 6 hours of real-time narration. Because that's a great one to watch if you can handle that, you know. I mean, it's a long time, but what you're going to see, oh, there it is. Thank you. Is that it? Trading a trend, is that the one? All right, let me try to put this in here. Dan, is that the one? 5 hours? Let's watch this. We're getting our squeeze. Let's come back here. So we have a low volume outside edge up here. We have our micro volume structure from this consolidation with the break high and the break low. So this is setting up our outside edge, and these are definitely not trade recommendations. Thanks, Dad. And guys, let's just watch. So let's look at this profile here, what it's telling us. It's saying that where this retail price was too high, we fell out, and now this is the current retail the previous retail price, current retail price, outside edge, low volume. So this is where we ripped down and we did this test. This was that last short that I had, remember? Well, no, there was this one, and then we talked about this one. So now this is resistance and this. So we're watching this level, this level. These are not trade recommendations. We're pushing through this level and we're out at our outside edge. So let's just see what it does. And you do not want to forget this. So the way I think of these is that was retail and it was too expensive. The shoppers left the store. Out here, and we ripped away from it. If we come back outside to this low volume area, and that's created by the urgency, we can get into it. And if we don't come all the way up in here, it becomes an outside edge for a potential short to come back here. Remember, the stops were at the mid and the VWAP, which is what we were looking for. Remember, think like a retail trader. Just don't act like one. So let's see what's going to happen over here. And again, nobody knows. Yeah, I think the 5 hour streams are really good too. I'm just getting, there's a post in the Trader Lab because it shows real time narration, kind of what I'm trying to do here for you guys, but 5 hours of it. And the thing about it is the market goes into different conditions. It gets directional, it gets rotational. And in the Trader Lab, we have different plans for the different conditions. So this is the next area to observe. Now, here's something, fun facts to know and tell. Doesn't matter. It's not my trade. I should say it's not a trade that Trader Lab participants should take. This long into here. This is a very different kind of trading. And then the next target would be up here ahead of it. Or nothing. You're out of your short from there. And now you're shopping for a short to come back here. But this is your resistance, you see. So you got the following. Outside edge, low volume area, can be squeezed. This is too high. This is the auction. And then it isn't that you don't mechanically do anything in trading, in my opinion. Again, that's me. All I know in trading, and even then, is where something might happen, not where it will happen. And then I'm using order flow to try to detect a change in behavior. So let's keep an eye on things. Please give a thumb up if you're in YouTube, by the way. That's useful and helpful. Shows me that you're getting value. Also, there's a link in the bottom of YouTube if you're interested in visiting the Trader Lab. There's 60 PDFs of these structured trades you can download and reverse engineer. as well as a library of webinars you can enjoy at your leisure with a lot different configurations. Okay, so this is our outside edge and our behavior. And if nothing happens here, then nothing happens here. We are very much in two-sided trade. Both sides are active, and I have nothing here at the moment. So let's watch. This is this location, high volume node. There's stops above here because this is where the last short was that I talked about. Remember, not this one, but the one before. So if I come out here and I exhaust, I can come back around. If it just keeps going, then I have no trade. That's just the way it is. So let's watch the behavior. VPOC migration. You notice how this high volume is sloshing around? That is showing you there's no consensus on value. So this thing is really up for grabs. So going up or down. I do remember there was exhaustion. Watch here. I do remember there was exhaustion at the high of the day. So that high might be secure unless we, of course, we come back up there. So I'm still inclined for the short side, but I think it's a coin toss. Right here, you see the fight? A buyer absorbed the seller. Seller is here. Who gets pushed out? Seller is here. So let's watch this behavior right here. Not a trade recommendation, right here. So we have micro high volume here. This is potential. If I break below, it sets up a potential short. It's not a trade recommendation. We're just going to watch it together. These are high risk behaviors because of the chop. The target would be here and here, not a recommendation. Let's just watch it. Your high volume is there. Your sellers were here. Your buyers were here. Your buyers took a shot here. The sellers took over here. You got a seller here, and the buyers absorbed the seller. We come back. This is a fight. It's really very contested. So we can easily squeeze out. So this sets up a short, but it's very aggressive. So, I just think act accordingly. And if you did not get involved and you didn't trade, I would think that would be a smart move. I'm not here to, I'm just telling you about me now. When I see something like this, I'm going, do I want to put risk on? What is this action telling me? It's telling me nobody's in control, that it's a two-sided battle. And the volume point of control shifting from here to here to here is showing there's no consensus. So if I'm going to get into short-term trading, and I don't scalp, but I can trade this kind of thing, it changes kind of the way I operate. I get very aggressive, very micromanaged, and I'm going to try to sweep either side out. So when we were coming up, we were taking the shorts out, and now we have shorts in this leg. So the trading would be back to here and to here. But this is different. So it's very much, for me, targeted trading. I mean, it's okay. There's 10 points potential. But I can't go any further into it. If you're interested in this kind of operating like this, and I'm not saying this is good, I'm just saying it's a way to operate in the market. You need to understand the context, what's the condition, how it changes, how you might get in alignment with it, and that nobody knows anything. It's all random. It's just like gaming in the casinos. You need to have anchored inputs so you do something consistently so you can measure it. You also need to know when you are in alignment and when the structure of the market is favoring your plan. When things are not favoring your plan, you need either to stand aside because you don't have an edge, or have a different plan for this, which would be very aggressive trading. So, that's up to you. Hope you got something out of this. Please give a thumb up in YouTube. Click the link in the bottom of YouTube if you want to visit the Trader Lab. It's a community of like-minded traders who've come together to build out the business of trading. That's what this stream is about, the business of trading, the reality of trading, not the fantasy. And There's a library of webinars that are available exclusively to Bookmap Discord Trader Lab participants, as well as those 60 PDFs of structured trades. You can download all of this, take a look at it. And the real thing about this business is it is a statistically based business. It has everything else is random in it, and it's over a large sample size, just like the casinos where you extract your edge from the other participants. It's not the last trade, it's not the next one. Every moment in the market is unique. Please give a thumb up. Look forward to seeing you guys tomorrow. Remember, if you're in the Trader Lab, this stream's available exclusively to you for 24 hours to reverse engineer, screenshot, and just kind of see how you did in relation to it. The other part of this is I'm going to remind everybody, if you have not confirmed your email in the Bookmap server, please do that. There's a link available in Bookmap. Also in the YouTube, if you haven't verified, so you'll have continuing access to Bookmap Discord. Thanks again, guys. Please give a thumb up, and I look forward to seeing you guys tomorrow. Remember, both sides are active here today. Nobody seems to be in control. I'm suspecting the sellers are going to have the edge in this, but it's definitely not a trade recommendation. The thing about trading is you need to attempt to get in alignment with it. Nobody can predict the outcome of the next trade, let alone how it's all going to shake out by the end of the day. Thanks again. Look forward to seeing you tomorrow. Please give that thumb up on the way out. It helps.